What's up, ladies and degenerates, permabears, and portfolio blowers? Trump opened his social media app Monday morning and did what any responsible leader would do, called out Jerome Powell. But before we get to that, this is the only show where we cut through the bullshit and get straight to the facts with no bias. Monday's market looked like a live action horror movie filmed by Trump himself, quite frankly. The Dow cratered 950 points on the day, down 2.48%. The S&P 500 nuked 2.3%, and the Nasdaq fell 2.5%. Bitcoin, it's straight up moonwalking on you cornballs. Gold is at an all-time high and it's not dropping anytime soon. And the dollar is limping like it just got dumped at prom, and we've all been there before, except me because I never went to prom. But let's unpack the chaos with extra sarcasm and questionable metaphors. And also, I got real flow data from Investor Central Club that we can dive into as well. Now, again, Trump opened his social media app today and decided to attack Jerome Powell. I warned everybody in the Investor Central Club Discord that the market was going to dump today because of that shit. No idea why. It's just more of like a gut feeling, you know? Jerome Powell, a quote unquote major loser, is what Trump referred to him as, and demanded lower interest rates immediately, which, if we know our big daddy Diddy Powell, that is not going to happen. Or the economy would slow. And, well, I mean, the economy's been slowing. That's why we're in stagflation. And, of course, this was in all caps because, well, it's Trump. So would we really expect anything less from the man, from the orange-haired 70-year-old version of Carrot Top? Now, here's the problem. The Federal Reserve isn't supposed to take orders like it's DoorDash or Uber Eats. It's supposed to be independent. But Trump is treating Powell like a contestant on The Apprentice Monetary Policy Edition. Wall Street was not amused with this, by the way. Investors see this as an all-you-can-eat buffet of risk. Undermined Fed credibility? Check. Tariffs on everything except maybe oxygen? Double check. And volatile earnings season? Triple check, because earnings season has been a total shit show so far. So let's welcome to the new theme, Sell America. The US dollar fell to the lowest level in 3 years. The European and Asian equity funds, got flooded with 15 billion in inflows, and US equity funds flushed 10.6 billion straight out of the system. So you do the math. Because if there's one thing foreign investors love, it's when your president threatens the central bank and throws a fit on Truth Social. Welcome to the USA. But when the world burns, two things thrive. Bitcoin is up to 88,000 currently, and gold broke 3,430. Because clearly when the president picks a fight with the Fed, you don't buy stocks, you buy rocks and imaginary coins. Now, the Magnificent Seven are now the pathetic pile at this point. It actually is pathetic. Tesla's down 7%, and they have earnings tomorrow. Elon's too busy attending press briefings to notice, by the way. Nvidia's down 4.5% after Weiwu said, "Oh, you like chips? Well, watch this biatch." And yeah, you saw you saw what happened. Amazon, it got downgraded. Shocker. Too much spending on AI and apparently just bad vibes overall. Apple, Meta, and Microsoft are also bleeding like they are storming the Normandy beach. Wall Street's watching Tesla earnings like it's a Marvel post-credit scene. If Tesla rips, maybe hope returns. If it tanks, well, it's time to grab a helmet and pray. Now, moving on to our dark pool action from our favorite data provider, Investor Central Club. Big money made some big bets, and it was away from the prying eyes of retail, unfortunately. But here are some Monday dark pool bangers for you. We had NVDA. We had NVIDIA with a $146.23 million print at the $96.91 level for 1.5 million shares. That's not a typo, and that was traded very silently, by the way. Tesla, we had 188 million quietly dumped. Looks like those Tesla golden sweeps I called out are about to print. Netflix, 63 million crossed because apparently binge watching earnings calls is a bullish move, but sure. And GEHC, TSM, Broadcom, and CSX, tens of millions in stealth moves. This isn't some random noise. This is institutional rebalancing, hedging, and sometimes a full-on escape plan. Now for the fun part, options flow. Let's see what the degenerates in suits were betting on today. SPY, let me pull up our inflow chart for today. We had 112.46 million in total inflow, with 20 million in calls against 91 million in puts. The most popular were the June 500, I believe, puts. 510 puts expiring on the 2nd. So do with that info as you will. There were 11 massive blocks. Someone is hedging like Powell's about to get fired on live TV. For QQQ, we had 31.03 million in flow with 8 million in calls against 22 million in puts. Both calls and puts, 22 million in puts. Huge bets on the 420 strike. Poetic. It's really just poetic. Tesla, we had 32 million in notional flow. Both calls and puts, both skewed bearish. With Tesla down 44% year to date, it's starting to look like the long-term tax loss harvest play. NVIDIA, we had 52 million with mostly puts thrown into that as well. Actually, no, it was mainly calls. Barely, though, by like 5 million. Not a great sign. The AI darling just turned into the AI orphan at this point. But GLD is out here still clapping cheeks like it's coming back for vengeance. People aren't just buying gold bars. They're betting gold goes even higher. Why? Because the US dollar is just bleeding out. And our big surprise here are IBT. We had a $3.5 million flow in bullish bets, insider info, or reckless optimism. And MMM and XLF both saw heavy put flow. Financials and industrials are just getting absolutely no love. So the translation here is smart money is hedging downside. There's no dip buying here. They're paying massive premiums to ensure the house before the fire finishes spreading. But let's not forget the side quests. Oil dropped after U.S.-Iran constructive talks. Absolutely crumbled like a Depends diaper on an adult. WTI backs near $63 a barrel. Traders now betting war won't break out yet. United Healthcare got body slammed another 6% after revising guidance down. Analysts calling this their worst moment since the Clinton administration. God damn. And the Barclays downgraded the dollar, which is wild because it's still technically the world's reserve currency. Emphasis on technically. So what do we watch this week? Tesla earnings is tomorrow. If this doesn't bounce, it's confirmation that Musk memes can't save the market anymore. Google reports on Thursday. Is AI still the future, or is it just a very expensive PowerPoint presentation at this point, like predictive analytics was? And the Fed speakers on deck, and maybe more Trump tweets. Place your bets. Rate cuts by July, or Powell gets replaced by Dogecoin? Maybe? I don't know. And keep watching options flow. Sign up for Investor Central Club. It's $25 for your first month, so don't be a pussy. Anyways, because if the whales are going to start flipping bullish again, you might just spot the bottom before CNBC does. If you learned something today or just enjoyed watching Wall Street implode in 4K, hit that like button, subscribe, and leave a comment. Should Trump be allowed to pick the next Fed chair from X? Or are we buying this dip and just opening more puts here? This has been Markets on Fire by Trades and Gains and your host, Max Pitts. Stay hedged, stay hydrated, and never trust Powell memes again.